Sure. Well, in the short term, it's certainly possible. If you get the news flow on more supply discipline like we saw earlier in the year, then I would expect that the oil price can rebound. I think as an equity investor, you try and play what you can predict. So, we're trying to look for the more structural growth aspects within the energy sector. So, for example, we have been investing in some natural gas companies in China, cleaner energy sources. I think it's much harder to invest just based on, what you think the oil price is going to be, given the OPEC situation. And, in the short term, we don't know, as we've seen with the recent volatility.
And just to unpack that investment thesis on natural gas especially, it's an interesting one. It makes sense because nat gas really is the transition fuel towards the low-carbon economy, and crude oil structurally, not immediately, but over the next couple of decades or so, is a sunset industry.
Yeah, well, I think these are long-term trends. They're not going to happen overnight. I think, as a sector, the oil and gas sector was very much out of favour, as we've seen in the last few years. And, given the rebound that we've seen in the price this year, that's obviously, boosted companies. So in the short term, it's been the right place to be. We've been underweight oil and gas companies, so, we've lost out a little bit in the short term. But I think over the longer term, again, we would rather go for the structural growth.
From a macro point of view, and let's bring it back to our region, the volatility in oil prices, a lot of countries, a lot of the big importers are that much more exposed because of subsidy reform. How much do you think higher oil, relatively speaking, is going to be a problem for the likes of the deficit countries, especially India?
Yeah, well, firstly, that's a much bigger concern for us. And I think, we touched upon Turkey there and the issues that economy is going through. Asia's not immune from these problems. Markets like Indonesia, India and the Philippines, although less so, are, more impacted in terms of current account deficits. And clearly the oil price is a big swing factor in that. So you've seen Asian currencies under pressure this year. The Indian rupee has been the weakest currency, or certainly one of the weaker currencies in Asia. And that's a consequence of the oil price. The good news is the stock market shrugged that off. So we've been overweight India, and India still performed well despite the currency declines. The stock market's done well. And that's because India's seen as being more immune from these trade concerns relative to the other economies. So let's see how the central banks deal with it. I think we've got rate news in Thailand and this week. Thailand's in a stronger position, is probably under less pressure to raise interest rates, whereas in India last week we saw a rate increase, and Indonesia and the Philippines have been under pressure to increase rates as a result.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.